Hey Jay, what's going on? Sorry about that.
Hey, no worries. Hey, Noah. Yeah, it's been an interesting couple of days. I'm sure you know.
Absolutely. I
Yeah,
hope you're not being affected by it.
yeah. Me myself, I'm not being affected by it, but there's like a lot of people in the Stanford community are like all talking about all of this type of stuff, just because, I mean, we are basically like one of the most startup heavy schools in the world, so of course it's gonna I know quite a few people that are like pretty significantly affected by it, and it's very sad and kind of worrying as a whole, but I think we just have to power through it, and we can never predict the future, right? So it is what it is.
Yeah,
My take.
certainly not. I have a friend who holds most of his net worth in USDC. So
Yeah.
he's not very happy right now, but he's hopeful that things are going to go back to normal soon.
I think USDC isn't gonna be too. I mean, this is just my personal take. Is that I don't think it's gonna be like Terra style crash. I do think that it's gonna. So I think that it's gonna bounce back, but um, I mean, I just put like $100 of gambling money in last night, and I was like, screw it, I'll just see. But it what it does create is definitely like a lot of like stress and anxiety, and I think what it tells us is that we need to be more um careful about just actually pegging currencies towards like any sort of fiat currency, whether that's the US dollar, whether that's any kind of other currency, and try and become more crypto native and like use these native backed assets in terms of like BTC, ETH, and stuff like that. That's my take on this situation.
So you like solutions like Liquidity, where you're taking an asset like Ethereum, you're staking it, you're storing it, and then you're borrowing against it. And so essentially, that stablecoin, I think LUSD, is fully collateralized, over collateralized by a crypto asset like Ethereum or like WBTC, or maybe a basket of blue chip assets. Is that kind of what you're getting at?
Yeah. I mean, that's kind of like the long run vision that like MakerDAO was kind of setting forth, right? So instead of having a completely pegged to the US dollar, kind of like peg it against like a basket of currencies, um, like Wrap BTC, like Ethereum, and stuff like that. I think we're at this point where the point of having these stable coins is just like back in the day when the US dollar itself was pegged to gold just through the Bretton Woods system, and then once that became like very obviously unsustainable, that's already at a point where all of these transactions were taking place natively within the US dollar, and then as such they could safely like decouple from that. I think we're moving towards that stage right now because all of these on-chain transactions, at least for on-chain assets, they're all denominated in like ETH and BTC and stuff like that. So the big question though for me is about real world adoption, because real world adoption, it's very much still everything is still denominated in fiat currencies, and before we truly get to a point where we can have some real world assets denominated in cryptocurrencies, I don't think that I think stable coins are going to stay until then. Yeah.
Yeah, me too. I mean, I don't even know if I see an industry without stable coins. Crypto assets are just, even my favorite ones, Bitcoin and Ethereum, are just too volatile for people to store. I don't know. It depends. Like if you're looking for a store of value over a long period of time, like 5 to 10 years, then based on its short track record, Bitcoin has been a great store of value. But um, I think that stable coins are kind of, or they have been a safe haven for a lot of crypto investors to kind of escape that volatility, especially
Yeah.
day traders. So I don't know. I don't know if maybe if down the line Bitcoin becomes much less volatile, then people will feel a lot safer trading in and out of Bitcoin, and we can denominate things, at least as far as crypto is concerned, by satoshis. But I still think Bitcoin's way too volatile for that.
I think volatility is an interesting question because volatility is there's also always a question of what is a volatile in relation to. of course, if you're comparing it to the US dollar, like, of course, right now everything is volatile. But if you compare it to like a basket of the goods of like other cryptocurrencies and stuff, um, like the definition of volatility changes. I agree with you in the like the immediate future, and possibly throughout the possibly into the far future as well. That like stablecoins are, I think they have been the biggest invention and the most important invention of the last bull run. And I think they're here to stay for some time while, and it's a necessary bridge while like we figure out how do we actually bridge crypto payments with actual real world assets. Yeah, but I think this entire situation, I mean, it just highlights all the uncertainty and, frankly speaking, the absurdity of like um, the industry that we live in. It's very surreal. That's all I can say.
Yeah, no, I agree, and I guess the way that I measure volatility, if I wasn't going to measure it by a dollar denomination, I promise we're going to get to the we're going to get to the talk in here in a sec, is just like its buying power, right? So,
Yeah.
let's say food, electricity, water, and I don't know, like a car. Things that I need personally to live. Gas. Um, the amount of Bitcoin, the amount of those things that Bitcoin could have bought me 2 years ago is substantially less than the amount that it can buy me today. But I agree with you. I think that you can kind of you can break down volatility in a number of ways, and that's kind of where my head's at. But hey, listen, man, I'm a Bitcoin bull. I'm a crypto bull, and I think this is just another bump in the road. I find that the FTX fiasco was much worse than this. But Jay, I want to get to know a bit about you. We're here to talk about Stanford and you and the blockchain club. So let's get to it. Give us a background into yourself, what you're studying, what kind of piqued your interest in Web3, and then how you plan on bridging your studies with those Web3 aspirations.
Yeah, for sure. So I'm Jay. I'm a sophomore at Stanford. I double major in CS and philosophy and literature. So I think, so I got into Web3 half by accident, half just out of interest. So did like, I like writing and like reading a lot. So I did like my own little literature slash reading blog back in like back around this time last year. And then that got like quite a bit of traction. I got like 10K followers, but I was not really able to monetize any of that um, because I was basically doing it on like a Web2 platform. Um, and then I realized, okay, so basically the entire business model of these big Web2 media or publications and stuff like that is to divorce the value of the content that the content creators are creating from the content creator itself. That's true if you look at TikTok, if you look at YouTube, if you look at Spotify and stuff like that. So in all those cases, I think that is the paradigm Web 2. Of course, that is very unfair to like artists, musicians, writers, and stuff like that. And that's something that I was like, is this something that NFTs and Web 3 can change? Because this was like when like this whole buzz around NFTs. This is pre Luna. So yeah, so I wanted to explore that. So for the summer, for last summer, I basically did my own like first project that was basically like a Web3 publishing house. Think kind of like Mira, but you also had like an editorial DAO to like control the quality of the content. And then everything was published as NFTs on like this open bookstore style marketplace. Unfortunately, that project never really took off. I think it's because I never really solved like a cold start problem, and I didn't have like a personal brand in the industry myself. So lessons learned, I basically started to want to write more because I loved writing anyways. So I started more writing about like the Web3 industry. So one of my favorite pieces is about like the ideological side of Web3. Um, some VCs started to pay attention to some of my writing. So I started to do a bit of content for them. And I started to look at a couple of projects as well. And then got into the leadership of Stanford Blockchain Club, running the content. And that's when I'm starting my the project I'm running mostly right now, which is called the Stanford Blockchain Review. The vision for that is to create kind of like a industry journal for all of the best thought leadership in Web3. So you can think it's like a magazine or a journal with the prestige of Science magazine, but with the accessibility of Bankless. That's kind of the overarching idea. Is because I think that Web3 is fundamentally, it's a ideological revolution empowered by technological innovation. That's how I conceive of Web3 as a whole. Um, so I wanted to portray that side of the thought leadership, and it was a way also to solidify like Stanford Blockchain's role within the ecosystem and within the community as well. That's the thing that I've been doing mostly right now. I've published 4 out of the 10 articles that we will be putting out for Volume One. We've already gotten significant traction, actually, like quite a lot of subscribers already. We will be pushing out more thought leadership and more articles in the coming, probably in the coming days, actually. So, yeah, exciting stuff.
Yeah, certainly exciting stuff and lots to unpack there. Jay, I wanted to first ask you about the Stanford Blockchain Club. I know we want to talk about the blockchain review as well, um, but tell us a bit about the club's inception, how long you guys have been around, how big the club is, how you facilitate yourselves, and also how you educate the broader Stanford uh, student base.
Yeah, so I mean, like, Stanford Blockchain Club kind of started out as like Stanford Bitcoin Club back in like I think 2014 or something, and then there were a couple like blockchain slash cryptocurrency related clubs here and there. We also have like the Stanford Blockchain Lab, which is like the actual like the scientific lab that like the professors run and stuff like that. So I think Stanford Blockchain Club came into its modern kind of conception in 2018, and then that was so it gained popularity in that run, but eventually it died through like it died in crypto winter, and then we basically resuscitated it probably 2020 or 2021 ish through starting to run the Stanford Blockchain Accelerator, which is like now one of the key parts of the club. And then yeah, and then now we've gotten like a couple batches of people through the accelerator as well. So our club like is kind of like split into a couple of like categories. So you have like the accelerator, which is its own thing. We have research and governance, which kind of like we have like token delegations from Uniswap, Aave, a couple of other protocols as well. We have events. So we do a lot of like speakers events, and like we have a lot of like in-person socials, and also we also run like a seminar as well. So actually, it's really interesting because 2 days ago we had Stani from Aave actually come over to Stanford, like in person, to do like a little talk about Lens Protocol and do a little social afterwards. So that was really nice to have. Um, yeah, and then we had yeah. So education right now is like it's very interesting because the education stuff we usually run like this small seminar class in which each week we get like a different speaker from the crypto community to kind of like just give like a lecture slash talk, and that's a one unit credit class. Um, it was interesting because before FTX, there were like 400 or 500 people like filling up the auditorium for that seminar each week. But now afterwards, like it's just like 30, 50 people. It's really so I guess like Stanford students themselves, or myself included, were like very, very flaky and like very jumpy because this Stanford is a place where there's so much opportunity. It's probably one of the highest opportunity per capita of any like school in terms of entrepreneurship, in terms of technology and stuff like that. So it's very hard to gain like people's attraction or attention when you're in like a bear market, and when like for example as like a counterpoint, AI is so hot that like basically our machine learning classes have basically like double triple the amount of students that they usually have. Yeah, that's I guess like the rundown of the general culture, and then the vibes around Stanford crypto as a whole.
So the flaky and jumpiness makes students go from one trend to another. It sounds like machine learning and AI are all the
Yeah.
rage today, and about 2 years ago, you guys were filling up auditoriums with 300 to 400 people, and now those auditoriums have negative 10x, kind of like a lot of crypto assets. Well,
Yeah, exactly. The volatility of Stanford Blockchain Club is proportional to the volatility of crypto assets.
but so tell me about the core club though. You guys said
Yeah,
you split into sectors. You've mentioned the accelerator first. So what kind
yeah.
of projects are typically a part of the accelerator? Are these student led projects? Are they projects from outside the university? We'd love to hear more about how that works.
Yeah, the projects in the accelerator are all there has to be at least one student, one Stanford currently enrolled student or has just dropped out student, basically. Within the accelerators, we support about 10 to 12 teams, and then we're partnering with like all of these top tier VCs to basically give us like mentorship, advice, and stuff like that. Um, we've gotten several like pretty good companies. For example, like Halliday, which is this buy now pay later for NFTs. We've gotten Caldera, which is rollups as a service. They just closed around by Dragonfly. Um, a couple other like really interesting projects, Nexus Labs, which also was led by Dragonfly, um, and that have like gotten significant traction like post the accelerator. The accelerator, it's like 2 batches a year. Um, and yeah, right now I think we're in the 3rd batch, so the accelerator's been running for a year and a half. Um, Actually, it's really interesting because the thing that I'm doing right now, so the Stanford Blockchain Review, part of the reason I'm doing it is also to as like an additional service add to our companies within the accelerator, because the accelerator companies have an opportunity to write a thought piece and then basically get free marketing through the Stanford Blockchain Review. So I think it's a win-win-win for everyone, and that's kind of how I conceive of the Stanford Blockchain Review. And yeah, that's kind of my why I'm doing this. Yeah.
Certainly. And research and governance is something I found really interesting when I spoke with BAM, Blockchain at Michigan. I didn't
Yeah.
realize that um, A16 or are you guys getting, sorry, are you guys getting your governance tokens loaned out through A16, or is it another VC?
I think so. I think for some, like for some, we get like the some tokens from like the protocols themselves, but I'm fairly far removed from all the governance stuff. We have another guy that's dedicated towards all of this stuff, and honestly, governance is a very tricky thing, just because it's a very like risky thing. You have to know like the industry very very well to know like what are the true repercussions of you voting yes for something or voting no for something. And even if you do know the industry very well, like oftentimes you cannot actually predict any of the repercussions. So that's actually probably I think what I think to be the most dangerous job within Stanford Blockchain Club, but that's just my personal opinion.
Yeah, but I think it's important for students to be participating in governance, just because at least students in university blockchain clubs, just because from my anecdotal experience, when I talk to you guys, you seem to understand this industry and understand this tech in a way that I find most people my age, I'm a millennial, and people older than me just don't, right? Same way millennials kind of got the internet and its potential back in the 90s. I feel like Gen Zs and Gen Alphas really understand, and part of it has to do with getting into it much younger and having the infrastructure that you guys have at the collegiate level. But I think it's really important, and I think that A16 probably knows that, which is why I'm assuming it's A16, that's what's the case with BAM, but that's why they're giving out some of these tokens for students to make governance decisions about some of the biggest protocols that make up DeFi and make up Web3. I mean, Aave, I think you said Aave, Compound, to name a few. But so you personally don't participate in any governance decisions. It's how big is that? How big is the number of students that does vote on protocol changes?
Actually, not. There's only probably like 2 or 3 that are participating on the governance side of things. Um, it's not a big crowd, but I definitely agree. It's a very important part, and I think if I had the time and energy, I would definitely want to like learn more about it and like have the ability to do that if I wanted to.
Got it.
Um,
And Jay, so events, you said speaker events and in-person socials. tell us a bit more about what these events look like, what the turnout is, if it's strictly for people, or if it's strictly for students of Stanford blockchain, or if you have people from outside the university come. I know you mentioned speakers from the industry, but I would love to know how, like, what these are made up of, and yeah, yeah.
Yeah, so basically for industry speakers, there's a couple. I mean, there's the ad hoc ones that we just do on every now and then there's like the class that I was talking about. The class thing, actually maybe I'll leave that to education, but I'll talk about ad hoc events first. So usually it's like all of these protocols or stuff. They reach out to us saying, hey, we want to do like an event on campus. We see if we can find like someone like a point lead on our events team that's willing to lead this, and then we asked if they wanted to be like invite only to like Stanford students, or whereas to like the basically to the community as well. Most of them I think opt for like very community focused, so it's not just restricted to Stanford students. You can just show up, as long as um, we have some pretty high profile speakers come in. So as I said, we had Stanley from Ave. Um, might have some like a couple of more high profile speakers come in like over the next quarter as well. We haven't really decided. I don't think we're allowed to like disclose who yet, but definitely like tier one protocols, chains, and like um, all of these people, because like they're all very much interested in doing events at Stanford as well and networking with Stanford students. But I would say like generally though, the turnout is actually, if it's open to the community, mostly it's like Bay Area Web3 entrepreneurs and like maybe some alums that attend rather than actual students themselves. At least that was true for like that's even true for like very high profile speakers. Maybe partially because like Stanford isn't like, some of the students don't really like care about it and care about crypto as much in the bear market, or some students don't really know who these like top shot entrepreneurs are. um, but generally speaking, I think the community is actually more engaged than the actual student body. Yeah.
I love that. And do you guys ever do university campaigns or kind of campus campaigns to recruit new students into the club, or spread the word of blockchain from a kind of 101 layman's perspective and try to get more students on board and hip to what this industry is all about?
Yeah, I guess like one of the most important ways we do that is through like the class that we hold. That's the it's the 1 unit like seminar class that you can take pass fail for. It's called Web3 entrepreneurship. Like basically looking at different ways of connecting the real and like digital economy through Web3. We get like, for example, Dan Bonet comes in to talk about like blockchain stuff. And then we have some other high profile speakers, some like people from Paradigm, from Protocol Labs, from like Evan Chung from Sui, just to name a few, like all come in as like guest speakers in order to talk about different facets of like the field, whether that's NFTs or like investing or starting your own company and stuff like that. So that's one way that we onboard people onto the club and within into the ecosystem. Um, of course, as I said, the attendance for that class, it's been very much proportional to the market's volatility as well. Um, that's one thing. Another thing that we also have some like classes within the CS curriculum, um, like CS251, which is cryptocurrencies and blockchain technologies. That's run by Dan Bonet. That is basically gives you like a technical primer into the different technologies that make up Web3, whether that's like AMMs, whether that's like actual consensus mechanisms and stuff like that. So all of those are actual class based. If you're talking like one on one, like we do have like some mailing lists. We have a Discord and we have Twitter. Those are probably our main avenues for like so for like interaction and like onboarding and stuff like that. Um, I guess I want to create like a new avenue through like the blockchain review, is to basically just have like a source of like long form content that people can read and like basically learn more about like the thought leadership and how different industry leaders see the industry itself. Um, yeah.
So Jay, you started the Stanford Blockchain Review, I think 2 months ago. Is that correct?
Yeah. About that. Yeah.
And you kind of brushed on this in the beginning, but I believe you said what inspired this. Well, interesting that you're CS, you're studying CS and philosophy. That's a cool combo, and you love to write. I believe you love to write, and you did a blog at some point. But what really inspired? What inspired the blockchain review? And then I want to get into some of the content that you've written over the last few months.
Yeah, for sure, for sure. I think it's the idea of like how do you create like an industry like go-to industry journal that's for Web3 by Web3 in a like a very Web3 way. And to me that first of all that entails sufficient decentralization because it's actually impossible for me or for another content team to basically just churn out 10 articles every quarter and go again and again and again. So why not allow the community to like speak for themselves? And in that, like a lot, basically most of our articles are written by community members, key thought leaders, whether they're alumni or not, and then people that are just doing interesting projects. It's a way of like give allowing people to like um, access to Stanford's name brand and like reputation as like an industry leader within the space and within like entrepreneurship ecosystems at large. So by empowering people with that platform and allowing them to write most authentically about their own visions of like um, what this industry is about and what this industry is going to move towards. That I think is something that's missing within the ecosystem right now. If you look at all of the tradition, like the crypto media outlets, um, they're basically very much borrowed from Web two. I'm talking like long form content. They're mostly borrowed from like Web two journalism standards. If you look at Bankless, if you look at the Defiant, if you look at CoinDesk,
Elaborate
all
on that a bit. That's interesting. You
yeah.
said most crypto media outlets are borrowed from Web 2 journalism or they go with Web 2 journalism standards. Like, what is the distinction between that and then what you guys are trying to do?
Basically that the distinction is that you have a bunch of professional journalists that are going to different projects that are interviewing them. The journalists are doing the write-ups. This is very important. The journalists are doing the write-ups and then the journalists are publishing it. So it's essentially very much centralized within like the media outlet. The media outlet gets to completely control like what the journal like the journalists and stuff like that. So you're looking at the world through the lens of the journalists rather than looking at the world through the lens of the creators and through the people themselves. So that's the paradigm that I want to. It's to basically allow people to speak for themselves, whether they're founders, whether they're VCs, or whether they're academics and stuff like that, is to allow people to authentically write about and then think about what they how what is their vision, why are they doing what they are doing, um and then I mean if they need some help on that, we're happy to like give them ideas and consulting and stuff like that. And then once they have something that's authentic to them, they show it to us and then we do like a round of like edits, fluency edits and stuff like that, and then we put out that piece. This is a very I think this is a much more Web3 model of journalism versus say all of the traditional media or like Web2 journalism. And that's the type of authenticity and a self of like and a sense of like self-empowerment that I want to create through the Stanford Blockchain Review.
So the idea is the ones that are creating and the ones that are building should be the ones that are reporting and putting out the content. And if they need help with their writing, because let's be real, I know a lot of developers and they're not the best writers. They can get help through you guys to
Yeah,
make sure that it's
yeah,
well edited and well published, or before it gets published. Excuse me.
yeah. That's the idea.
Okay.
The idea is to like the crux of the writing, like the ideas be like authentic and like representative of what people actually think and what people actually envision, rather than like what the journalist imposes upon the other person. No, I think you were muted or
My
something.
gosh. Oh my gosh, I do that
Yeah.
all the time, man. I will say there's like a bug with my button where I tap it really quick and
Okay.
sometimes it just doesn't register. But so you guys have, let's see, several different publications that have been put out. Um like what is privacy in Web3, nouns thou and the philosophy of governance, crypto developers by the numbers. Are there any of these that you've done specifically?
Oh, I wrote the what is privacy in Web3 actually. That was my, volume one, article one. It's obviously I have to put something out there as kind of like a yeah, it's kind of like saying, oh, what am I actually looking for? So if you look at the privacy article is very interesting because what I'm trying to do is to break down something that's very abstract, something that's very often misunderstood, and take it through like a lens. Put it through like a different lens. What I call like the three layers of like basically of privacy is that the network level conception, the protocol level conception, and the user level conception, and then take that and then allow for this very abstract, very confusing concept to be understood, and for you to have basically like a pretty good gauge of what projects are within this subfield and what this subfield is moving towards. That's kind of the idea, and I think what it embodies what a lot of the Stanford Blockchain Review is about as a whole. It's about educating. It's about getting more new insight, and it's about like creating like cleaning up all of these abstract jargons that we always hear from day to day, and actually allowing people to understand what is behind all of this. It's a process of demystification.
The process of demystification. I love that. I had a good conversation yesterday with Brian from Say Network, and we were talking about the importance of being able to take, as you said, these abstract concepts and breaking them down to the point where the layman can understand them. People, and this is something that I've been doing with my spaces as well. I used to get really technical with my questions, and I found that most people, if they get lost, they get discouraged, and if they get discouraged, they're not interested in learning more, and it's really important for mass education and mass adoption to be able to take, like you said, these concepts and break them down in a way where most people can understand them. And I love that you chose ring signatures to go with. It seems like this is, like you said, privacy focus. You referenced ring signatures, you referenced zcash, you've referenced zero knowledge proofs, um, and you say you've done it in a way where most people will be able to understand this from a conceptual level if they read through, correct?
Yeah, I think that's the most important part. It's not necessarily whether people can code or people understand the tech, but it's if people can use intuition to actually understand what all of these conceptions are about. I mean, in that article, I iterate a lot about like privacy, at least one form of privacy that say Monero and like other like Tornado Cash they provide is a sort of privacy in the crowd, where basically you just hide in the crowd and then like hope that you won't be discovered. That's the type of, and then it's sort of these intuitive ideas that are often like, I think they're the importance of these ideas are understated in sort of like demystifying what crypto is about. Because if you talk to like actual DeFi degens and stuff, they throw around pieces of abstract jargon and stuff like that all the time. But for someone that's just like outside of these circles, it's very much off-putting because it sounds basically like you're just like throwing just like words around, and like it actually I think is repellent against people from entering the industry. So what you really need to do is to explain these concepts in a very intuitive, everyday manner, and that's what I'm trying to do in this review, at least in the privacy article.
Mm-hmm. Yeah, another good example was Ethereum.org during the merge. They used the analogy of a moving spaceship having its engine changed in real time, to kind of draw an analogy, uh, and this draw an analogy and describe how difficult of a transition the merge is. I thought that was really cool, and I love the illustrations that they added alongside the explanation or the analogy. Um, that's I guess that's one like piece of advice I'd say to add. If you could add more illustrations, some people like those. I don't know. I think you're doing a great job with this, and I think it's really cool that you're allowing other people to come in and publish articles and publish and publish content through your blockchain review. Jay, is there anything else about the blockchain review that we haven't brushed on or talked about that you wanted to expand upon?
Yeah, I guess one of the another key design of this review is that I basically if you look at some of the articles, I put on like what I call a difficulty level. That was actually very much intentional because I think like a lot of like these thought articles and stuff, I want to cater to as an accessible audience as possible. So whether that you're like new to the space or whether you're like a veteran in the space, I just hope that like through reading the review you're able to actually learn something new either way. So the way those labels work is that you have level 0 being people that don't have any knowledge about the space, any background on the space, level 1 being kind of more like thought leadership for people that are already crypto native, just like uncovering a new perspective on different aspects of the field or where the field is going. Level 2 is more on like the technical side of things, so like a technical discussion, for example, of cryptography or of like zero knowledge proofs or of like verifiable computing and stuff like that. Those actually require some more technical expertise to understand. The hope for that all of this is that gradually, as you're like a newbie in the field, as you basically don't know anything, you can basically transition or progress from like the level 0 articles to the level 1 articles and to the level 2 articles, and gradually see yourself growing as like somebody that's becoming more and more experienced in the field and stuff like that. Yeah, so what I'm trying to do is to balance accessibility with quality. It's actually a very hard task because usually if you are catering to a very wide audience and stuff like that, you suffer somewhat on quality. um, and if you do like too high quality and stuff like that, you end up only reaching a certain audience or a very specific audience. So that's kind of like the key goal, and that's kind of like the key part of like all of these design decisions that I want to achieve is how do you both sustain like a very high level of quality as well as you're able to reach a very wide audience. Yeah.
Well, look, Jay, I wish you the best of luck with the Stanford blockchain review. And if there's anything that we could do to help you guys put out content or get more eyes on the content that's being published on here, I'm happy to do that. We can talk a bit more offline about it. I I wanted to move on to the next, the final segment of the space, unless there's anything about the Stanford Blockchain Club or the Stanford Blockchain Review that you feel we still need to touch upon.
I think I'm happy to move on to the next topic that you want to talk about.
Sure, sure. Yeah, this is what I do with all the students that come on. I just it's kind of fun. It's speculative, and I think it's very fun to speculate. But yeah, we'll start, and I'd love to hear your insights. But I want to go with Bitcoin first, the OG, the Big Daddy. Do you think Bitcoin will remain king for the foreseeable future, or do you think that we will see Bitcoin being flipped by another asset like Ethereum sometime in the next 5 to 10 years?
I think it depends on what you mean. The way that short answer is yes. Long answer is it's more complicated. The relationship between Bitcoin and Ethereum, if you look at the actual like actual fiat currencies, I think is about between Swiss francs and U.S. dollars. So Swiss francs, you know that they're a store of value. You know that when you go to war or whatever, like they're gonna like one Swiss franc is gonna be the same as like the Swiss franc 10 years later. So it's gonna be a store of value, but at the same time, it does not necessarily have utility in and of itself. Even if you have like stuff like the Lightning Network, I don't see it as having the amount of like composability and on-chain like basically versatility as Ethereum has, which is why I think that Ethereum is basically more like the US dollar in that you can actually buy commodities. I mean, right now on chain, hopefully in the future, off chain commodities through Ethereum. And why I do believe that like overtaking of Bitcoin from Ethereum is just a matter of time. Yeah.
And so, how do you feel about Ethereum? And I'm talking in Ethereum where you have sharding, and really the layer one is just a chain of proofs, and all the transactions are happening on highly scalable layer twos and roll ups. How do you feel about that future versus some of the other layer ones like Avalanche, like BSC, like I don't know, just to name a few, Algorand, Cadena. What do you think is going to happen in this kind of, I don't want to say war between layer ones, but do you think that Ethereum will remain dominant and keep capturing more and more of that market value?
The way that I look at the infrastructure landscape is that there's going to be three winners. Um, Three winners. So a ZK snarked Ethereum slash, with all the rollups and stuff, that's clearly one winner. The second winner is going to be a move language chain, whether that's Aptos or Sui. I'm personally, I think Sui is going to be dominant. Um, is because Move is paradigmatically different from Solidity. It's object-oriented programming, stuff like that. It allows for a level of composability that Solidity cannot allow, which means that just on Move language, you're able to create some apps that leverage parallelism and stuff like that that you're not able to on Ethereum, even if you like scale it or if you roll up and stuff like that. It's just a lot more efficient and more like it's just a lot better to create on a move language. It's more natively supported. So I think a move language chain will win out. The third one I see is Cosmos, or like something that has like a lot of like IBC, specifically just because Cosmos chains are so like modular and they're very composable. And I believe that app chains are going to be like a very important part just because different applications need like different specs for like different chains and stuff like that. And Cosmos right now, I think, has got the most composability of any app chain solution. And I do think that it's going to remain dominant in the future. I believe that inter-blockchain security, so basically borrowing validators from the Cosmos Hub and stuff like that, and basically the entire vision of the Cosmos 2.0 white paper, even though it got vetoed, I think it's going to be a matter of time before that is slowly put into place. Um, yeah, so I see the world as having three main infrastructural solutions on L1. So I see Ethereum, I see Cosmos, and I see probably Sway or less likely Aptos as essentially forming a triopoly, and then a bunch of other chains, L1 chains being like used for more bespoke purposes. Because I don't think that like an L1 like an alternate L1 like BSC can actually, or like Cardano or stuff like that, can actually compete with a ZK snarked Ethereum plus an app chain or stuff like that, simply because those like L1 chains and stuff like that, if you're they were like essentially experimental at the time that they were conceived. Like all of these third gen blockchain chains, they were because they wanted to prove that like proof of shard. I mean, they wanted to prove that like POS actually worked. They wanted to prove that sharding actually worked, etc., etc. But now we know already that all of these actually work. So I don't think that there's much of a point of them existing in the future.
Well, Jay, I look forward to the day where you write about this. I would love to have you write about it and explain it the way that you break down the what is privacy in Web3. And I think that would be really important for people to read and kind of conceptualize in layman's form.
Yeah, for sure.
Um, so, Jay, what sector of the industry excites you the most?
This is a big one. This is a big one. I mean, I would split it into two sections. So short run, infrastructure, especially rollups as a service. Long run, I would say NFTs. Um, Short run, just because, yeah, rollups as a service because I think they allow for a sort of like scalability and a form of onboarding that you've never really seen before. And I think that out of this bear market is going to be one of the most important inventions um, that come out. Um, and I've seen a lot of like you can think about like rollups as like the future of not only like scalability but also of privacy as well. If you look at like Aztec Network and stuff like that, yeah. So essentially, that's a field that I am really excited about in the short run. On the long run, NFTs, because NFTs are basically these. Um, you think that they're profile pictures, but really they are these primitives, these new digital primitives for an ideologically aligned society. I mean, this I go into, well, I mean, one of my friends goes into a like pretty deep on this within the Nouns DAO and the philosophy of governance. That article talks about this type of idea. But then in the long run, it's about reshaping our digital identity through and then creating these bespoke online communities through through these shared narratives and shared identities. And it's also a way for people to reimagine what is an asset, what is a digital asset in and of itself. And NFTs go so like far beyond just profile pictures and just images. It's like music, text, any files and stuff like that. All of this stuff are basically can be done through NFTs. And that's why in the long run, NFTs are probably what excite me the most. Yeah.
Yeah, I think NFTs. That was my follow up question. Was literally going to be, tell me what you think about NFTs and specifically which paradigms, which industries do you see the most disruption from this, as you put it, primitive technology. But
I think
good.
it's going to be one thing that I'm watching out for, I guess, is just like how it affects the creator, basically the reimagination of a creator economy. Because as I said at the beginning, this comes around full circle, is that my journey into Web3 was through realizing how Web2 like create like basically these creator platforms were basically divorcing content value from content creator. So my personal thesis, and I still believe that like NFTs in the long run are going to bridge that gap and allow creators to capture that actual value of their creation through like basically solidifying these ownership structures, through actually showing these on-chain uniqueness properties and whatever. um, so I think the creator economy is going to be a big one. Art, of course, but more than that, I would say music, I would say writing. I'm personally interested in writing, but that's just because of my background. Photography, movies, all of these on-chain assets are gonna, I think, transform into NFTs, and that's gonna lead to a lot of disruption. Another area is just NFTs are gonna be the primitives for, as I said, for basically a new type of social network. If you look at people already, like these Azuki communities or ape communities and stuff like that, they already have very tight knit like communities online and like offline that are basically ideologically bootstrapped from what the NFT means or what the NFT signifies. I think what we're going to see a lot more of that in the future. So NFTs are also going to be a big disruptor in terms of like the social media space. Yeah.
Okay, Jay. Last question, and this is my favorite one. If I was to hand you $100,000 today, and you had to dollar cost average into the market, into the crypto market over the next year, what would that portfolio look like?
Portfolio, I would say I would put like a significant amount into ETH, probably like 40%. Some into because and then like because I said like the infrastructure landscape, there's I'm very much bullish on Polygon Hermes. They've put a lot of effort into that, and it's coming along very well. So I would allocate another significant portion to Matic. I would look at some DeFi protocols that are very much native, crypto native. So what I'm specifically thinking, Maker, Curve, and Lido, those three as well, and then Atom as well because I'm bullish on it in the on what they're doing as a chain in the long run. And then, if possible, some move chains as well. Probably not Aptos though. If Sui has a token, then yeah. But I guess that's pretty much my portfolio and how I see things going.
That's solid. Look, Jay, if there's one thing that I found every student is bullish on, it's Cosmos. Um,
Yeah,
and I would love to know, you kind of touched on it earlier, but I would love to know what you love so much about Cosmos, because I've heard other students at the collegiate level also say that Cosmos is going to be one of the next big ones, and I think a lot of people are sleeping on it, at least in my circles.
definitely. I think Cosmos just the if you look at like the technological, they're what they're making is essentially an SDK, and that SDK has matured and basically created some really great projects. I mean, Terra slash Luna at the time was created by Cosmos, one of the best Cosmos chains at the time. But even after Terra Luna collapsed, like if you look at it, like Cosmos didn't collapse. It's still ongoing, and there's still a lot of chains that are building it on that are building using the Cosmos SDK. It's such a industry standard. It's like an SDK. You can think about like the equivalent of having like PyTorch or TensorFlow in in machine learning. it's like, would you not buy a coin that's basically PyTorch and TensorFlow in that? Like, of course you would, because no matter what model or no matter what chain you're building on top, you're using that same infrastructure level. And I think Cosmos is also a community that has like very bold visions. You only need to look at the Cosmos 2.0 white paper to see how they actually imagine kind of like a universe of chains. So if you really do believe in the idea of a multi-chain world, which I think is a very consensus idea now, Cosmos is going to be a key player of that. Another thing that people are sleeping on is that there's the IBC, the Inter-Blockchain Communication Protocol, that Cosmos is so famous for. It's actually expanding beyond just Cosmos chains itself to actually enterprise-grade chains. Enterprise-grade chains, specifically built using Hyperledger. I've written an article on that as well, but it's not in the review. It's one of my personal articles. Basically, Hyperledger is something that's also been sleeping on, because a lot of these big Fortune 500 companies, they actually have their own app chains. They have their own app chains run through IBM Hyperledger, and then in order to do supply chain tracking, to do logistics and stuff like that. So Cosmos, through building like bridges to these chains, is also a way of onboarding institutional Fortune 500 actors into the Web3 space. I mean, Walmart has an app chain. Who's to say that they won't release like an NFT on Cosmos like in the future? Like, all of this is possible, and all of this is because Cosmos has such a great into blockchain communication bridge.
Hey, look, Jay, I really enjoyed talking to you. It's been a pleasure having you on. We have we have not just the Stanford Blockchain Club, but the Stanford Blockchain Review to look forward to seeing grow and hopefully push that needle of mass adoption forward in the coming years. If you would like to come on again in the future and talk about the wide array of topics that you seem to be quite the expert on, you're more than welcome to. We have Socratic style panels every week at 4 p.m. UTC. You're welcome to join in on those. Or if you want to come on and just do another one-on-one with me where we dive into the world of ZK rollups, or we dive into the world of Cosmos, uh, dive into the world of NFTs, you're always welcome. And if you have any final words for our audience today before you head out, go ahead and share them now. Otherwise, it's been a pleasure.
Yeah, for sure. I think my final words is like, this industry is still very much it's still very much nascent. I'll do like one statistic. So if you're like hesitant on like whether to jump in or not, just take the leap, because I'll share one statistic, like one final statistic. Right now, prices are back at about 2018 levels, but the number of developers in the space has on Bitcoin 3x, on Ethereum 8x, on Cosmos and other chains 10x. So if you think that this fundamentally this is a technology industry, which means that the long run value of this industry is driven by how much value the developers themselves can create. So if you just look at the developer count, there's at least a 3x, 5x, 8x arbitrage opportunity here. So if you're not jumping in, what are you waiting for? That's my final word.
Beautifully put. Jay of the Stanford Blockchain Club, founder of the Stanford Blockchain Review, Whalecoin Talk community. You're listening to another episode of The Aquarium. My name is Noah, and remember, everything you hear on this broadcast is meant for educational purposes only. Nothing is financial advice. So take care, have a great weekend, and we'll see you all Monday. Bye-bye.
Thank you, Noah. I'll see you later.